Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. I got Greg Machinery Pete Peterson on to talk about what's happening in the marketplace. But before we do that, this edition of the Moving Iron Podcast is brought to you by John Deere. Greg, how you doing this morning?
I'm doing well, Casey. How about you?
Doing good, man. Doing real good. How's fall treating you up there? You guys had your first frost yet?
No, I don't think so. The leaves are starting to go. It's a little chillier. I've been gone the last 4 or 5 days, but I don't think we had any frost up here. But yeah, we've been just running like October's been what September was. September was what August used to be. But no, I think it's finally starting to kind of turn a little bit here.
Yep. We had our first real heavy frost. I don't think it was a big enough one to really do too much damage on stuff that's still out there, but it was cold enough that you saw people putting bags and stuff over the plants they had outside. So getting to that part of the year and
Halloween's coming.
It's coming, man. I'll tell you what, we're ready to see some change here. So we're slowly teetering on that. I saw some clouds the other day that I was out. Of course, my son goes to college, and I take care of mowing his lawns. And Saturday morning when I started mowing, it was raining, and the clouds looked an awful lot like clouds that were full of snow and not full of rain. So we're getting close.
You look off into that the northern sky, and it tells you what's coming, doesn't it?
Yeah, it does, for sure. Well, speaking of end of the year frost, here we are. Hay season's wrapping up. And we've got about that last cutting in the north anyway, for sure, getting wrapped up. I saw one swather out running the other day on my way down to Kansas City, just outside of Scottsbluff, so they're getting that last little bit they can get. But like everything else we've talked about that is on that hay and forward side, you're seeing some real movement there, Greg. Talk a little bit about what you've been seeing happen in that market.
Yeah, I tell you, good used hay equipment, Casey, it's just getting hotter, actually. I know this Saturday, so 2 days ago, as we're talking here, there was a nice farm auction, a farm estates auction out east. It was in South Hill, Virginia. It was by Jason Aycock Auctioneering. I'm going to be heading out to, I think, Virginia, North Carolina line to cover one of his sales December 6th. Really nice farm auction. But the sale he had Saturday was kind of a small sale, but Jason and his crew sent me a couple video clips. One was a New Holland BR 7060 round baler. I think it had just over 7,700 bales on it. It's over $31,000. That's the highest auction price I've ever seen on a BR 7060. Previous high was $29,000. That was back kind of when things were starting to just go nuts in the used equipment world back in mid-June 21. That sale was in Viroqua, Wisconsin on a 14 model at 29. But again, $31,000. Saturday, and right next to it was sitting a little 10-foot no-till drill, which those small no-till drills have been pretty spicy of late as well. Yeah. This one was a Haybuster 107, a very nice condition, just over 1,100 acres on it. That brought $22,000. Again, same thing, record high auction price. So part of this is like you and I have talked about a lot. If you stay under that, 50, 75K, good condition used, even in a challenging market, is hot. But this hay equipment market, just scorching hot. I know there was a sale up north of the border in Saskatchewan back on October 8th. Our friends at Ritchie Brothers had this sale at farm auction. And that sale had a 2017 John Deere 569 round baler. It had 5,968 bales through it. And when you convert it to US dollars, it was $40,135. For an 8-year-old 569, that's the 7th highest auction price ever on a 569, highest in over 3 years. And when I posted on Facebook about that, Casey, in the discussion thread, as people were talking about it, my friend Derek Weeman with Weeman Land and Auction out of Marion, South Dakota, right in the southeast part of the state, Weeman, great auction company. Derek hopped in and he goes, "Hey, one more for your list, Pete. September 12th. We had a little online farm auction in Emery, South Dakota, where they had a 12 model John Deere 568 round baler, 3,439 bales. That brought $44,500, second highest auction price ever on a 568. So, and then you go back 1 month earlier, August 16th, we saw a sale in Evansville, Wisconsin, second highest auction price ever on a Massey round baler. It was an RB 4160V. Had 43 bales through. It was like new, but $58,000 hard cash auction. And I mean, that's what a dealer would ask on the lot, high 50s, 58, 59. And that was Georgia Auction Service had that. So these round balers are just pinging in from all over the place. But again, what's a new one cost? And livestock guys, have it, it's the money spigot is open on the used equipment side. So it's been really interesting to watch.
Yeah. Now, I think, there's something to this. You look at where, obviously, the market that we're in, the dollars that we're in, depending on where you're at, if you're on the cattle side, if you're on the crop side, there's tell two tapes there. But when you're looking at how things are moving along, that space in there, that $50,000 to $150,000 something, maybe even up to $200,000 something, is really, really attractive at the moment, and a lot of that has to do with we're at the bottom of the marketplace. We talked about all that stuff, and we're seeing some things move up. We're moving things forward. This is the kind of stuff that we see take hold there.
Yeah.
But when you're looking at hay equipment, especially, not that this isn't the time of year that you see hay sale, because you do see a lot of hay sales this time of the year, guys getting ready for spring. But you typically, the activity that you're seeing right now, you would typically see in that February, March timeframe as they're moving to that first cutting. And that's typically when you see the market really heat up if you're seeing a market mover like that. So it kind of makes me wonder, like, okay, if we're right here now, what's that going to look like January, February, March timeframe? Is that going to carry over into that first part of the year? And everything that I've looked at so far, it's just been a slow build all year to where we're at right now with the volume and the dollars associated with that I don't see anything on the horizon that shows that, hey, we're going to be moving things slower into that first quarter.
I agree. When we post these things, again, these are just data points. I mean, it's just sold, so you don't have to like it, but that's what it brought. Whether it's that Haybuster drill or that Deere 569 up in Saskatchewan, and one thing, it's interesting, Casey, on the seasonality point. I think one thing that I've been talking about a lot to the Wall Street crowd is just how the whole, particularly the used farm equipment space, has become so much more efficient versus years ago. Because I've been tracking this data for almost 36 years now. 36 years, in 2 weeks it'll be the 36-year anniversary I started doing this. But there used to be a totally seasonality to it. So the hay equipment would do this, or the harvest equipment. But with the growth coming through the pandemic of online auctions, and your bidders are just everywhere now, nobody blinks an eye. You just click the button. And it's getting harder to find. Like we talked about last week, it sounds funny, but so for example, that 8-year-old 569 round baler. Yeah. Our friend, I think we talked about Jim Reitzel out there in Eden, Ohio, making a post on Facebook, used equipment dealer, saying, hey, from our perspective, it's getting tight. Yeah. Which, if you're a larger dealer, 30, 40 stores, obviously still working down, but much better than it was a year ago. So it's really interesting to just track it all. And again, earlier when I was doing the, price of new, right? It's just whatever it is. I mean, it drives the buyer demand for the best condition used, even on the grain side when things are so tight. Like you say, if you stay under that 150-ish, 175, whatever, if it's a good 10, 15-year-old pre-def, the buyers are just all over it.
Yeah. Yeah, and I think there's the idea of looking at, like Jim's talking about, that space is under attack right now, because that's where their equity positions at. That's what they can go out and get. They're updating and stuff like that. Now, that being said, if you already have a 1 to 3 to 5-year-old something on your lawn, you're not going down and buying a 10-year-old something. You might be, right? You might be down there buying a spur tractor or something like that, because the price is right and those kind of things, and you've got the equity to do so. But if you still look at the marketplace, that 1 to 3-year-old stuff, there's still a ton of it on the market, and there's no doubt about it. But the promising thing about what we're seeing in the marketplace is that 1 to 3 year old stuff that we see. If you go back a year ago and look where that stuff was priced at on average and where it's at today, it's a significant drop. I mean, I'm talking probably 25 or 30% drop in advertised prices, which is not because they traded it all out and brought new stuff in, and now they just readjusted the pricing strategy as they came back through the stuff they sold. The stuff's been written down. Those margins have been cut and slashed and everything else that were down
Right.
there. And not that there was a lot of margin out there to start with, but as you start watching that stuff come down, you're putting stuff into place. At the Moving Iron Summit, I don't remember who I was talking to, but we were having a conversation about what was going on in the marketplace and what they saw happen in their area and those kind of things. And he said, he goes, we went back and repriced our stuff, and it's amazing how fast stuff is selling when it's priced right. And I think that speaks volumes to what we see happen in the marketplace right now is that, the amount of plus $600,000 things on the market's significantly less than what we saw a year ago. You look at, balers, for example. You go back and look at $60,000 used balers on the market. There's not that many of them, right? There were quite a few to start with because the price of a new one was close to $80,000, $90,000, those kind of things. And you start looking at how those were playing in there, what that back from the new one thing looked like. But now things have fall back in, they're settling back in. And there's some stuff you got to sell through, a lot of junk to sell through. And I say junk, I mean like stuff that's good shape, but it's just been on the lot for a minute. And we're pushing prices to where people are not interested. And that's the thing about a falling market is, the old saying of trying to catch a falling knife and hope it doesn't stick you in the foot on the way down.
Yeah.
That's the thing that they're going now. And I think we're at that place now where I think we found the equilibrium between auction value and retail value and how those things play together. And if you look at how those things are coming together right now, there is the retail space versus the auction space, that difference between the two is tightened up now. And I think you're starting to see more of a stable marketplace where the conversation is being had of, all right, I'm going to go talk to my dealer about this one versus, hey, I'm only interested in one at the auction right now. They're interested in both. They're going to play, have that conversation with both folks before they start making a hardcore decision.
Yeah, I think you're 100% right, Casey. I think, like I say, in my weird machinery Pete vernacular, it's the used equipment space is more efficient. It's tighter. It's faster. So that what you're talking about, those conversations at your Great Moving Iron Conference, dealers verbalizing, to me, they're faster in adjusting, and the reason they're faster is frankly because there's fewer dealers.
Yeah.
There aren't, how many ownership groups were there 15 years ago? How many ownership groups are there now? So they're more nimble. Yeah. And again, as across the space, we understand why farmers don't like that fact, but they deal with it, and then we understand why manufacturers wanted fewer dealers because, in theory, you can be more nimble through the downturn. And you're right. On the auction side, we've talked about prices solidifying. In fact, I just looked the other day at X9 1100 average auction price actually up this year, which would freak people out. Now, saying it's up, I mean, it was like 435,000 average. Last year was 425. But that's a testament to how aggressive these fewer, larger dealers were last year. They went out to auction like I've never seen before and absorbed humongous financial losses, but did it to get the ship righted faster than any downturn I've ever seen before, which was why back in January, when we were talking here on Moving Iron Podcast, and why we want our farmer audience to listen, because we try to provide actionable, advice based on the data and things we're seeing. So back in January, my thing I was saying to the farm audience was, be careful in assuming this what you think of it's this slow moving train of used equipment values going down is going to just be like it was in the past, because it's not playing out that way. It was a tight window of 1 year, maybe a year and a half of down, but then it's been this since February.
Yeah.
And now you're talking, if Q4 is always tends to be the strongest quarter of hard, just auction pricing. So it'll probably hold, at worst, hold through Q4. Now you're talking about a whole year it's held.
Yeah.
And so, directly to your point, and like I say, if you would really pull back and you were like looking at investing in the space, despite all the problems in agriculture right now, if you were looking at a equipment company, you would have to be a fool not to look at how much more efficiently the used equipment is being handled. And is it messy? Is it bloody? Yep. Go ask our dealer friends how last year was. But, the inventory situation is better. You don't have to catch a falling knife because the auction prices have solidified. There's not as, you're not selling new, and this is again that like you and I have talked about often through this year of 2025 is actually what's over the horizon. Whenever corn and beans go up a little bit, you are going to have a situation where you've had farmers who haven't bought new equipment for a long time, whether they'll want to buy new again, but it's a powder keg sitting there waiting to go off. And that's where if you're able, again, still through the rest of the year into 26, be aggressive, with, call your dealer with any used equipment on the lot you're looking at updating. It's still a good time to do that. If you wait until the money starts flowing, it's going to be 2021 all over again, I'm afraid.
Yeah, I think you're probably right. Look at that. Fun fact for you, Greg: if you were to render a guess on how many 5 stores or bigger ownership groups are out there, and we're talking across the entire spectrum: John Deere, Case, New Holland, AGCO, Kubota, and then your independents. If you were to guess how many 5-store entities or bigger are out there, what would your guess be?
Well, I'm going to be a little challenged in my guess now, Casey, because right before we started recording, I told you that I just caught a red eye back from LA through Seattle. So I haven't slept in 2 days right now. But, again, I look back at just the raw number of dealers there were and, the breathtaking change. So that is interesting data. Just lay it on me. How many 5+ ownership groups are there today?
203. That's in North America.
203. Okay. So how many under 3 store do you have data on that, or would you guess?
Ownership groups, no, but I can tell you that there are, and this is all coming from the big dealer report out of that Farm Equipment magazine puts out on the ag equipment intelligence side. But if you look at the total number of locations, so this is locations of whether they're a 1-store dealership all the way through a 100-store dealership, there's 6,750. So my guess would be somewhere in the neighborhood of probably, it'd probably be double. I'm guessing it'd be double that number. So 200 and 500 and some probably.
Yeah, it's getting to be, it hits me in the face every week as I just wade along and, post things and comment. And I thought of it recently when the former owner of Caroline Equipment, I think it was Caroline Implement out of eastern Wisconsin, passed away. Dave, and I apologize. I've been up for 2 days, but Dave was a great guy. Had me over to speak at a customer event. I think they had 2 stores. It was back in 2017. It was right before Christmas. We had a great event. And, like we saw a lot over the last decade, then they were purchased and now part of I think Reister and Shell, great John Deere dealer over there. And it just happened all over the place. So, when we look back at the last downturn, mid-13 through 15 into 16, used values, it took longer to find that footing, almost 3 years to where I saw auction prices level off.
Yep.
And this year it was, combine started 1 year earlier in 23, but everything else, it was 24 was just an attack. Used values dropped like a rock. Same percentage they dropped back a decade ago, but they just found footing faster. So come February 25, I was watching the auction prices come in and go, ooh, well, that was pretty good. Well, that was pretty good. That was a good sale. That was a good sale. And it's kind of held despite the increasing challenges, with grain farmers. So it's really been an interesting year. And now we talked last week, the total number of auctions. This is really interesting because those auction prices are solidified despite the number of auctions has gone up 14.5%. And it frankly looks like it's going to go up more November, December into 26. So there's a lot going on there, sub trends to talk about. A lot of farmers collectively, they can't buy new, but also kind of realizing like, hey, we have a lot of equipment. We've purchased a lot of equipment over the last 10, 15 years. And what we have is relatively new. So while we're tightening our belt, we're also reassessing like, maybe we're good. Maybe we'll go and pick up that used whatever. Now, whenever corn and beans go up, see, that gets interesting because you were on the dealer side during that last downturn. You were used equipment manager. You were living in the vortex of it. But what I heard dealers say back in 14, 15, 16 is, Pete, we'll never let this happen again. Okay, your reaction, that laugh, right. I'm a Minnesota guy, so I absorbed what they were saying and I understood it. But my thing was, okay, when corn and beans go up, we'll see what happens. Now, the only difference now, again, is there's fewer ownership groups.
Yeah.
So you've got fewer decision makers, basically. And collectively, what we saw in 2024 was those fewer decision makers going, let's get ahead of this and let's smash all this stuff out to auction and we'll get killed on it, but let's get it out. And a decade ago, when there were more owners with 2, 3, 4 stores, they couldn't. Then you kind of had to hold and hope for better days. So it's more all of this. It's more efficient right now, and you just have, wherever you are in the equation, dealer, farmer, lender, investor, you should be aware of it, eyes wide open, and then act accordingly going forward. That's why why we're doing this for people talking every week.
Yeah. Yeah. No, the never going to let it happen again thing. That was I've heard that so many times in my career, and I think the bad thing about it, there's two things that really make a big difference with this, is that when you look at how the ag equipment works, how processes work on the ag side, is that you can see the steamroller coming for a year. You can also see the good times coming for a year.
Mm-hmm.
It just takes that amount of time. So, if things perk up tomorrow, you don't recognize any of the good stuff for 12 months.
Right.
You got to get
Right.
order the stuff's got to get here, and all the stuff comes through that. Well, in the meantime, while things they're good when everything's ordered, and then it gets, you see it starts to become depressed about halfway through the year when everything comes. It all happens. So I think that's where the whole process, the whole thing about where things are headed, what things are going, and you and I, you just like us, we go buy a vehicle or something like that, and we go out there and look at it. Hey, things are great. What are you talking about 6 months from now? What are you worried about 6 months from now? What the market's going to do, right? Hopefully you'll have things sold by then, right?
Right.
Or there's no way my machine's worth this much, and you can show them all the data in the world. I think it play out, and it ends up being a whole thing at that point. The importance of data in today's marketplace is no different than in any other industry, right? You have to take the data point that's there. You have to follow the trend line. When those trend lines start to develop, you have to start making decisions immediately on those, right? It's not you see three segments of lines going down, and you're going to hope that the fourth one is going to start going back up. It's probably not. It's probably going to keep going down, right? And the fifth one, the sixth one, the seventh one are going to keep going down too, and then you're going to see it flatten out, and it's going to come back up. But when is that going to happen is what you have to start paying attention to, and you're going to.
Right.
It's not necessarily an elevator down, right? It's what's the old adage in the markets, escalator up, elevator down type of thing, So it's gradual up, straight down type of thing.
Yeah.
And that's
Well,
what we
that's,
saw. And every one of these
yeah.
downturns, we've seen that exact same thing. So,
Yeah, it's, well, again, a collective, whether it was back then dealers collectively saying, "Hey, well, we won't do this thing. We won't get so heavy with late model used inventory." Okay, well, let's see how it goes next time around. And farmers right now saying, "No, we won't. I'm not going to buy as much new when things." Well, we'll see. Uh, it's some fascinating, again, things within that, Casey. So, tax policy. It
yeah,
doesn't get talked about right now, or when the money's flowing, and it is, maybe that's a big part why we see those round balers going nuts, or these loader tractors, because that's where the money is. So come year end, which we're coming up on now, it's like, that becomes one more reason, like, well, yeah, I can write this off, and but you know, to verbalize now that we won't go down that road again, buying as much new. When the money flows, then the tax thing, boom, comes right to the fore, right there.
right.
And so come end of the year, it's like, well, and then again, it's just such a force. So all this is connected,
Yeah.
but yeah, I think everything we've talked about speaks to that. The whole space, whether you like it or not, is just more efficient right now. And again, like you said, eyes wide open to these data points. And I do think that I've always thought this, and I think it's still true, that the auction, what something sells for today on the auction market, really is the canary in the coal mine. Because
100%. Yeah.
it does, corn, beans are up, down, whatever, beef up, down. Okay, here's a 5-year-old combine with 500 engine hours. You guys decide what it's worth. Machine repeat. I'll report it, what it sold for, and is that up or down? But again, X9 1100s they're actually up this year now, little, but who would have thought that? That's what we were talking about in January, February, March, and it's not just one model; it's across. Again, data tells you things if you know what you're kind of looking for, and that falling knife thing is totally understandable. I mean, you don't want to buy and now it was a $400,000 asset. Now it's probably an $800,000 asset. Ooh, I don't want to buy that when it's still doing a 22% year over year drop.
Right.
So when it levels off, okay, now you know. So make some decisions. And the fact that it dropped just 15 to 18 months this year to firm up versus the last downturn, it took 42 months, is what it is. That's how it is now.
Yep. For sure. For sure. So a lot of, like I said, data points are the most important aspect of this, whether times are good or bad, right? I mean, if you're watching the marketplace, sell into it like you can, like you need to, and then start to pull back when you, on both sides, right? Buy when you need to buy, when you can buy, and when that point happens, start pulling back. But go in there eyes wide open, and that's what there's so much data out there that people can look at that it's not a secret anymore as to what the market is or what your machine's worth. It's not that hard to figure out.
Farmers and dealers, and we go way back, Casey. There's such a gut level knowledge and instinct on the dealer side, and same with farmers. And it's and that's really valuable, your instincts. But this data there's so much, like you said, there's so much more of it. And that's why I started 36 years ago, was to at least give, back when there was no data available, to go beyond the gut level. Should I do this? Should I not? It's like, here you go. Here's some, stand on this data and make your decision to go for it or to pull back. Because we want, on the farmer side, we want you to, your equity to grow and to not make mistakes. On the dealer side, we want you to, be as efficient and profitable as you can to help your farmer customers. So it's a wonderful segment, and hopefully all our data and discussion can be helpful to people.
Right on. Good stuff. Well, all right, Greg. If folks want to reach out to you, get you to come speak at their event or come out to their auction, the easiest way to do that, just go to machinerepeat.com and click on the contact page there.
Yep, our phone number's there, toll free. Call our office. And hey, we got some great auctions heading out too. It's going to be a fun end of the year, and really interesting to see, what happens with these prices. Obviously, tariffs. Who knows?
Yeah.
Will there be a bailout? How big? It's But every day, like I say, canary in the coal mine. What's it going to sell for? We'll be there reporting.
Yep. Funny thing on the tariff side of that, Crone decided to not pull out, but back off of delivering new units into the United States because of tariffs. They made an announcement of that the other day. So,
yeah, it's a day by day thing, and that's why it's so interesting. Hard cash auction right now, because all this is getting swirled up together.
Yeah.
And there's obviously increasing headwinds, severe headwinds in ag on the grain side, and it's just fascinating to see on a day by day basis what farmers are voting for. How much is this thing worth? And so, yeah, it's going to be an interesting end of the year, no doubt.
For sure. All right, Greg. Good talking to you, man. I'll catch you again next week.
All right. Have a good week, Casey. See ya.
All right. Stay tuned for more Moving Iron podcast after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast, Marcus. I got Rich Possum here from Critical Point Podcast. Rich, how you doing this morning?
Good, thank you.
Doing good, man. Doing good. Before we get started, let's talk a little bit about your podcast, where people can find it and what they're going to hear when they find it.
Yeah, they should go to criticalpointpod.com. There's some information up there, some free things. But I have a membership thing where they can sign up for grains only subscription, but they can also sign up for a stock market economy without the grains, or sign up for both all in one package. And basically what I do is I use business cycles. I've used it for 40 years here, but I've developed things over the years and learned new things and found more history and data. And what I've come to the conclusion is, there's a boom bust every decade, and I want to use that as an anchor point. That the stock market goes up 100 to 400%, it comes down 20 to 50%, can come down more if there's super cycles. And I want as a starting point and break that down into units all the way to where are we today. And I can do it not just for stock market and grains, but there's a few other markets, and then also for the economy. Even though the economy is long term, we at least have business data coming out every day, and we can kind of measure that and gauge it. How's it progressing? And I just like staying focused on, okay, we might have 7 to 12 good years of economic growth, then we're going to have a 1 to 3 year contraction, recession, depression. It's going to be the bust phase. So I talk of these things from very short term to very long term. I give people ideas whether it's an up day, down day in the markets versus is this going to be an up month, down month, and then what's going on for the next several months. But then I can build it into a long-term perspective. And I put out a morning brief for a few minutes every morning. Then I have a weekly update that can go quite a bit longer, greater detailed. And so if people are too busy and they're fairly comfortable what's going on, lots of times they'll just use the weekly update. And then when things become more active, they're coming close to when I'm going to send them an alert and say, hey, we've got a problem here in the economy, or hey, sell stocks and stuff like that. Then they're ready and prepared for that, just because they keep in touch fairly regularly here. And they can just go to criticalpointpod.com and sign up for that. And,
okay. All right. I'll check that out. There's also the free version out there. If you want to check that out, there's a good spot there on, I'll listen to it on Apple Podcasts. It's a quick 5 to 7 minute little hitter there talking about what's going on for the day. So well worth your time to check it out. All right, Rich, before we got started, we were talking a little bit about what's going on in the economy and things, the way things are moving. We are seeing some stagnant movement in the marketplace, to say the least. I guess as you are looking through this, Rich, give me some of your feedback that you're seeing in the marketplace, some of the stuff that you're paying attention to right now.
Yeah, recent days we had a CEO poll put out by one of the big Wall Street media type firms. And the CEOs were saying they anticipate a 1.2 trillion cost out of these tariffs when right at the moment, some of the forecasts, at least out of White House, have been like 200 billion. The more significant thing was, in my opinion, is that they were forecasting stagflation for the country and business for the next 18 months. So that's a pretty good time span. If they'd said 6 months, I'd say, yeah, okay, we'll breeze through that. But if it's 18 months, that's long enough to be a concern of stagnation of the stock market, even while the economy is growing. You can just get in some weird things with stagflation, that things are getting more and more expensive. And even though people are getting paid more, it's not enough. And the stock market may or may not do well. It's weird. It can be a little on its own, out in its own world at times. But when you look at on balance, though, really the country's not getting anywhere. So it's called stagflation. It's called stagnant. All right. So it can increase tensions of people, and so we've already pretty tense in the political side here. It makes me wonder how more tense can it be here in the next 18 months is what we really need to consider. And then you can have crashing markets even during times of stagflation, even though some of the data will just say, well, we're just spinning our wheels, we're not getting anywhere. So people can suddenly just out of the blue dump, they're just tired of it. So it is a bit of a concern here for the next 18 months, even though my model is willing to lean on the side of a growing GDP into 2027. At the same time, it's suggesting this inflation has turned a corner. You can't see it that much yet, but it looks like it's ready to recover going into next year, if not into 2027. So will it surge towards the end of that? It's making me concerned late next year. We might see rather high inflation, lower stock market, and we'll see higher interest rates, at least by the free market, if the Fed has not yet decided to swing the other way. Whereas at the moment, the modeling is showing that interest rates can work lower in early next year, or at least the end of the year, just because of the Fed. And we do have a Fed meeting coming out here at the end of the month, and they likely will lower interest rates. I think they're more nervous of things falling apart than they are nervous of rising inflation that later causes problems. And I think they feel like they got time and room that they can help the economy a little better here, but then later raise interest rates if they have to. So that's where they're going. They're erring on that side of, let's have the lower interest rates. They're still printing money. Powell did speak last week and made comments of actually backing off QT, and which is a bit odd because I thought they already had, but there's some other different accounts and the way they move money. They could be pulling some of that back in order to help out. All right. Because we already know since April, if not since March, the Fed has actually been printing money and helping out the economy. They just didn't lower interest rates till just recently. And I think at least President Trump wanted both, because that is the sweet spot in theory to help out the economy, print the money, lower the rates. The question is, are we going to overdo this? Is it going to come back and hit us because of higher inflation? And yes, it can on its own. But I'm also wondering with these tariffs, maybe it's just a longer delay than what we realized of these tariffs impacting our economy, because I think it was Goldman Sachs might have just come out with a research paper on that and also came up with this idea 1.2 trillion is likely the impact. But they said a little more than half of that was probably going to be the consumer paying that, which means where's the rest? Well, the rest can come from countries helping out, that they're not charging as much to make up for this tax situation. But you could also say that some of it is from the business in the U.S. actually eating some of that cost, which Trump said they should. So in order to help out. So I think we just got to be concerned that it really ought to be a decent year next year for being this, but you can just see things can slip away and road on us. And we're just going to have to stay on top of it. It's just not as easy as looking at prior presidents and generations of these business cycles. We've got some wild cards and some wild fires burning inside the system. So, but at the moment we're hanging in there. So,
by thread, Rich, by thread. All right, Rich. So let's talk. You hit a little bit on interest rates, which saw Jerome Powell spoke at an economic forum earlier this month, and pretty much talked like it was a foregone conclusion that they were going to have another round of cuts for interest rates. As you look at that, your thoughts on that and where you see that headed?
Yeah, I think he cuts in October. Question if he cuts in the year. I will say he will, but it won't surprise me if he does not, especially if the inflation data picks up going into the end of the year. I think he'll say, let's have a wait and see attitude. Um, I'm fine going either way right now. The question I had was, it looked like in the last meeting, the notes from the last meeting suggested probably lowering into early next year and then taking a break all the way to late next year. And then a few of them saw a chance to lower rates again late next year. Um, I'm questioning whether they lower early next year. I think probability is slipping on that, but we'll see how fast the data goes. But the interesting thing is they weren't willing to really, as a group, they weren't willing to suggest, oh, they're going to lower rates like April on into August next year or anything like that. I think what they were saying is lower for a few months here, help out, keep the money printing, and let's reevaluate. Is the economy now growing, but growing in an inflationary move more than just a nice, sustainable economic growth? Because the problem with inflation, it leads us to believe the economy is doing great, and it's not. And so it's a real tricky thing to watch. And what's concerning to me is some of these businesses, if they just passed on their tariff costs, that's one thing. But to pass on tariff costs and then increase their profits, and we now have Levi Strauss Company came out last week, maybe the week before, and said they wanted more profits. They were raising their prices for more profits. Just flat out said it. All right. And there's just too much of that. It's just too easy. They've learned this capitalistic system way too well. And I can't tell whether they're a little ignorant and selfish and not seeing how this machine really works, or is it they don't care? You know?
I think it's the latter. Yeah.
It is frustrating, yet at the same time, kind of, I feel like being discouraged. At the same time, it's kind of exciting just to see what's going on, because I guess sometimes it's nice to see a house burn to the ground. I don't know, but yeah, it's worried me for a few years. I mean, I'm definitely a capitalistic fan, but people have noticed in the past 5-7 years, I come out talking a little socialistic at times. And how I look at it, just because some things can fix things better for people doesn't make it socialism. But some people want to take those things, put them under socialism, and then they automatically say, well, we can't have those. And that's ridiculous. Some of those things help people, okay? And our country has evolved over the years of, we're so fixated, obsessed with business, we really don't care about people anymore. And if you look at the better run nations in Europe, over in Asia, China, they care about both. At least they're getting better. They know they have to take care of business. That's why communism, the old-fashioned communism, failed. The old-fashioned socialism failed because they wouldn't take care of business. Now they've learned somehow they got to have a balance between the two. It's like pistons moving in an engine, and they got to keep that restrained within the engine, the block of the engine, right? And so the modern communism, socialism is actually winning. It's working, and it's going to beat us if we're not careful. So if we must stay capitalistic type country more than everybody else, we still need a new capitalism. All right, something has to change, and all I can tell, especially young middle-aged people, really want to get involved in politics, and they better. Is look at ways, how do you take care of people and take care of business, and the list is all over the place, and we'll fight and argue over a lot of it, but if we can find that blend, okay, we're going to be a happier nation, and it is going to happen in the next 20 years. The problem is, how many more years do we beat up on one another till we finally say, we can kind of agree with that, let's kind of get along here. And I'm trying to learn more of neoclassicism and neoliberalism, and they were confusing to me. I thought they were the same. And so I even asked Chat GDPD, the AI, last night, and it said, yeah, there are similarities, but there's dissimilarities. And they also started at different times. One of them started 1950s to date and includes the globalization, includes our free market system. And then the other one started out long before that. Well, the more I've realized is really you could put the Republicans on one of those, Democrats on another, but because of some similarities, there's an entanglement there, as if we were all moving down a path, even though we were kind of like putting this show on, fighting and arguing. It's like we just went down this path anyways. Right. And so does this path have to end, and what is it? And the interesting thing is I'm not coming up with very good answers. Well, what is it? What is is the future here. But I really believe if Republicans and Democrats, and I'm now blaming Democrats as just kind of really a second Republican most of the time. President Clinton, really on the economic, financial side, he was gung-ho Republican, really. It was his social side that he remained liberal. So he just fell right in line from carrying forward from Reagan and Bush right on to the next Bush and so forth, right? So I've come to the conclusion, though, if those two are kind of entwined with one another, it must be reflecting as the American people are doing the same thing. We're following those two things, but we're kind of keeping them parallel one another and working. So unfortunately, I don't think we can blame everything on the politicians. We do have to say, you know what, we're creating this ourselves. So what is it that we want? and, and like every other day, I think I got it figured out, and the other days I don't.
Yep. I know exactly what you're talking about. I mean, we can't seem to, two parties can't seem to get along. If one says the sky's blue, the other one says no, it's turquoise, right? And it's just, it's just they can't. Nobody can get along, and that's going to drive the decision making process. Even if a good idea, they change ideas for the sake of changing ideas because the other person came with those ideas. So now that we're in charge, we can't agree that their ideas were good, right? So we're gonna go around and change stuff. So it's just it's a mess.
Yeah,
it's an absolute mess, and it shows, right? Take a look around. It shows.
yeah,
This absolutely shows.
yeah.
All right, let's jump over and talk about some business cycles now. As you're looking at your business cycles and where GDP's at, as you take this look now from where we're at now to the upcoming decade here, the 2030s. What do you see happening there, and how do you see that all playing together?
I see brighter days in the 2030s, 40s. I'm just not convinced. If they're only a little bit of a change where we are to now, then it might be a struggle for too long, and it's going to cost us going out all the way into the 2070s. By the 2080, 2090s, we'll probably be right back where we are today. Now this is getting in some very large cycles and comparing Europe and Asia and the U.S. But I can see those kind of things going on. But I'm rather optimistic we'll be in a better mood in the 2030s and have sorted this out. The key is, do we do it in the 20s? If you're using elections as a symbol, and it's really more important. I know you need strong leaders, but at the same time, it's really more of a symbol. It has to be the American people really want to do it. And right at the moment, it feels like we're forcing ourselves into it instead of stepping up and saying, no, but this is what we really want. Okay. So it's not the right mentality. We're poor thinkers right now. And I think, if we have to wait all the way to 2032 to find out later, and heaven forbid, if we're 2034 and later about where we are now, I think we've messed up for the 20 years, and I think that's going to hold us back for several decades after that. And so hopefully we sort this out. But on a near-term basis, if you look at the trends, the economy is hanging in. It's deteriorating, but you could say, well, we haven't really seen anything break loose yet. And with the interest rates coming down and the money printing and Powell talking of less QT or tightening, having a little freer move there, you could say that it's unlikely we're heading for recession. But I got to tell you, you look at this data every week and you're saying, well, there's some things getting better and there's some things getting worse. And, it's a salad. And is it going to be a spoiled one or not? I'm rather optimistic that we'll still get economic growth. I'm not as bullish or optimistic on the stock market I once was. And I warn my members, because I've been a diehard bull for decades, it seems like, and it's really paid off for me very, very well. But I feel as though I want to be a little quick and nimble in the future here. And if the stock market ever sped higher, and there are some people that I follow I have a lot of respect for, and one of them at least is calling for a blow-off move. And the minute he said that, I recall he started out in commodities, because blow-off move is normally a commodity terminology. And it just simply means straight up, straight down for your prices, okay? Whereas a melt up on Wall Street, they don't talk about a meltdown. They just talk about the melt up, and they leave it at that. And whereas the commodity people learn, well, if you're going to melt up, you're also going to melt down. And that's so commodity, I don't think Wall Street's quite caught on to some of that. And that's what this one individual was warning. He runs a multi-billion-dollar fund. And he was just saying, I think you got to be quick and nimble here and try to be optimistic and make all the money you can make, but you better be preparing for a day of reckoning. And So we're watching out for that because in theory, really the stock market ought to hang in there to 2027. But I got to tell you, I wonder if it won't be over in summer of 26 on into maybe late 26. And again, that's the key of keeping an eye on inflation because I'm concerned of surging inflation latter half next year. The trend is there. I can see for the moment, I've talked to this for 12 months, inflation's bottoming out, heading higher. You can see we're right, and yet we're not right enough. It's not scaring anybody. That's why the Fed's even saying, well, let's not worry about inflation right now. Let's worry about trying to keep the economy growing and moving forward and make sure there's enough money there so something doesn't seize up. Right now, if you really get into the geek stuff of our debt market, boy, there's things that can just seize up. Just your engine just seizes and you're out, you're done. Okay. But whether we get there right the moment, it's not the right stage in the business cycle to have that kind of a financial crisis or anything like that. But we do want to watch it. We want to monitor it. So take it from there.
Yeah. Okay. Right on. All right, Rich, good stuff as usual. Folks want to reach out to you and get more information about what you're doing. What's the easiest way to find your podcast again and get in touch with you?
Yep, go to criticalpointpod.com and don't be afraid to email me, rich@ag-financial.com.
Right on. Rich, appreciate you being on the podcast. We'll catch you again next time.
All right, thank you very much.
Stay tuned for more Moving Iron podcasts after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like Exact Apply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast. Got Aaron Findle back on to talk about what's happening in the marketplace. Aaron, how you doing?
I am terrific, sir. Another day on the high plains and all.
Yep, it's we finally broke through the frost line. We're getting frost about every morning now.
Yeah, we are.
Yeah, so
We're way into the 20s.
it's fall is here. Fall is
Yes.
here. So speaking of fall, typically out here in our neck of the woods, we get 3 cuttings a year of hay or alfalfa or whatever it is that you're doing. And if you're lucky, that 4th one is right about now. Right. And it depends on how early the frost comes if you get the 4th one or not. Right. So this year, obviously, the frost is here now, and it's typical. This is the time of year when you typically see frost, so it's not like it's out of whack early or anything like that. But as you kind of walk your way through this, I saw one swather running the other day on my way to Kansas City, just south of Scottsbluff, out there by the Wildcats, laying down some grass hay, and there was so made me think a little bit about what was going on in the hay market, what that looked like, and right now, if you look at where the market's falling into for the first 18 months, really, of this cattle market that we've seen, you didn't see a lot of movement on typical, cattle style tractors, loader tractors, hay tools, those kind of things. You didn't really see a lot of movement in that. And a lot of that was guys getting shored up from getting money back to the bankers, getting things paid off, doing things they need to be doing, buying more cows, looking at their operation, those kind of things. And I would say over the last 6 months, you started to see that break loose, and every month it gets a little more active. And this month, this October is no different. You're seeing some movement, especially in the auction market of what you see happening on the sales with balers and windrows and those kind of things. So things are moving right along, kind of as you would anticipate them doing so. But the biggest thing, I think, as you look at this market right now, is the stuff that's selling it's kind of like everything else. It's not a whole lot of 1 to 2 year old stuff that's being blown out of the market right now, but it's a lot of that, what I would call mid-level stuff that's got 3 to 5 seasons on it type of thing. And you're seeing some not high hour stuff, but that more intermediate hour stuff that, that 7,000 bale baler and the 1,000-hour windrower and those kind of things. As you watch that stuff, Aaron, what are you seeing happen in the marketplace?
Yeah, you're exactly right. I would say we actually through the year this year had a pretty healthy, might not be the right word, but a pretty good flow with new windrowers. To your point, that second never hit the lot. And the third was sold right away. Baylor's have not been what I thought they would be this year in general. There's been used 3x4s that we get in have sold pretty good. Round Baylor's all year were very quiet. New sales. By the way, I looked up me and a coworker, both who work at a dealership yesterday, thought the MDP on a Baylor was completely wrong. We were.
Yeah.
Welcome to 25.
Yeah.
Wow.
Yeah,
Goodness.
They've really moved along nicely.
I want a 6-digit round Baylor. Watch this.
Yeah.
Now that we have called the sale barn and scheduled the calves to sell, Baylor's, bing, 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 and new ones. Lots of new Baylor's now, which we do get that every year. You know, that's who buys our Baylor's, the ranchers. They get their calf check now. We always have a little bit of a after season run on Baylor's just because of cash flow timing. But this year it has been not really much, and then wham. So that would validate also what you're saying there, used guru. Also, for the most part, now, backwards of that, what was wonderful for us this year and is often a product segment you just run away from, shoppers, baby.
Yeah, that is
very good market all year. Like, remember that in the podcast we were talking about, I was selling choppers in January and February regularly. And that is like, those are the 2 months you don't sell a chopper.
Right.
Because everybody's trying to survive and be here next year.
Right. Yeah.
You know? So really, really, really surprising in that. It is because of the segment. It's not if you pay attention to the world.
Sure. Yeah.
100%. There again, that's the segment with some income, and that's where it's going. So, and not necessarily directly to that guy, but that guy works with all those guys, and that's who buys the chopper.
Yeah. Which is funny, because if you look at where Class 3 milk's at right now, it's like 16, just under $17. And that's like, holy crap low, right? So, I mean, it's just one of those crazy things. But again, on the feeder cattle side of it, you know, you're seeing obviously record numbers every day across the
oh yeah, and $300 a pound hamburgers got to go somewhere, right? So guys go buy choppers.
Exactly right. So
not quite how it works, but
so I was thinking about this the other day when I was coming home, and I was kind of, you know, we spent a lot of time talking about, you know, the $1 million combine and the $1 million chopper and all these different things like that, but we don't really spend a lot of time talking about the high 90s, low $100,000 round baler, right? And that's probably as much or more impact than those other items. Because the thing about that is, like, not that you get a lot of 1-year-old trade in, like 1 season use balers come back in, and like you could do like combine stuff like that, but still though, I mean, it's that you still have to bring the second buyer to the market, right? Right. So if you're let's just throw it out there, say we have a $85,000, $90,000 baler, right? And it comes back in with 5,000 bales on it, right? Which that's not uncommon to see that come through, right? So, I mean, it's a low bale count, but it's not necessarily.
No, but you got guys that'll roll them every year and put 5 on them.
Yep. So you get this 5,000 bale baler sitting out there. A new one's $85,000, $90,000. Pricing that second one, so the second guy comes into the marketplace, is, you know, he's like, man, the last one of these I bought was $55,000. Right? Because if you're pre-COVID, if you have not bought a baler since pre-COVID, it was about $55,000 before COVID hit.
For a new one.
For a new one, yeah, right. For a brand new one. And you're buying a good quality used one somewhere between $35,000 and $40,000. So now you're sitting here looking at this, and you're taking a look at your baler situation. You're like, well, I guess I could buy a new one for 85 or 90,000, or a used one for 70. What? You know, like what bizarro world am I living in right now? Right. So I mean, I think so. That's the situation when you
time for some rollers and belts.
But the thing about this is that, especially right there, the idea of taking that baler and rolling it every year with 5,000 bells on it, or every 2 years with 10,000 bells, or whatever it might be, that if there's any marketplace where extending your trade cycle is going to really start affecting the marketplace, it's going to be windrowers and balers. And those are the things that are going to drive, especially balers, and it's going to drive that to where I used to trade my baler every year, but now I'm going to trade it every 3 years because the cost per bale thing just is so mind-blowingly out of whack. Because you know what I mean?
I was literally thinking of those numbers and stuff in my head, because that's exactly how you do that. Cost per bale when you trade every year, put 5,000 bales on it. To get that used baler where you have any hope in selling it, oh my God, those were 5,000 expensive bales.
Yeah, they were.
So here's the thing though, Casey, the entire realm of used baler buyers, that has all but been an etched in stone process, and doesn't deviate like combines and tractors and this and that with the highs and lows, and it stays pretty damn constant. So now that the iron is so expensive, the guy who used to be it's kind of like, we've talked about this in tractors, but it was driven by, started by the shortage, and then carried on by prices. The 1,500-hour tractor became the 3,500-hour tractor. Well, the 5,000 bale baler's got to become bare minimum 10. So now your 15 bale guy, personally, that's where I like to buy. I'm a 15,000 bales baler buyer.
Right.
Boy, that's hard to
Pick a pack
of pickled peppers with, man.
Yeah.
But you got to retrain all the customers now.
Well, that's just it.
And on top of that, it's retraining the shop, because everything is so set. Okay, this is a 5,000 bale baler. Yeah, we're going to look at every one, but it needs this and this, and we know that, and we sell it with that added, and here we go, and we just bang through them again, and we're down to the third trade. Okay, so as you're doing all that, the guy who buys, your buyers are all crisscrossed all over the place, because they used to buy on bales and budget matched up. Now you've got to pick one or the other.
So I think all of this in general, like this same conversation keeps running through my head, is that if you look at where the current situation's at, because there is a equilibrium that you hit between what the new one costs and what the used ones cost, and they all fall into a slot.
Right.
Not the slot you want to fall into. It's the slot they fall into. That's where it's at. So as you're watching this and you're a used equipment buyer right now, and if you're watching this podcast and you're a used equipment buyer right now, you need to be prepared to buy equipment that is higher hour than you typically buy it, or more bale count than what it is, or whatever the hour meter, the usage meter is telling you, right? Because the new buyer, yes, you're still going to have the guys that trade every year, right? But that's going to widen out, right? Those dollars that are associated with that are still going to widen out. Now, whether that works for your operation or not, and you're a 1 year roll guy, that's a conversation you need to be having right now as you look at this, because the idea that you're going to be able to trade the same way you've traded for the last 3, 4, 5 years, or whatever it is, even the last 2 years, is probably going to change dramatically, if it hasn't already, in what that approach looks like. If you're a first generation used buyer, second generation used buyer, I think you're going to have a great opportunity to get some equipment that is going to be priced very competitively in the marketplace as those trade-ins come in. But I think they're going to have more hours on them than what you do, because the idea of, for the longest time, hey, you know what? If you have 5 tractors and you put 1,000 hours on them, let's get 10 tractors and put 500 hours on them.
Right.
That was a lot of things that went into that. Now the other idea behind that is that's going to go away. So you might even be down to like, okay, so instead of 5 tractors where I put 1,000 hours on them, I might go to 3 and put 1,500 hours on them.
Right.
Because I really only need 3 tractors. I just kind of rotate them through, and I do that's a pretty common thing I saw happen.
That's the have to number, not the want number.
Exactly, right? I can do it with 3, maybe 4, but I don't need 5, right? Definitely don't need 10, right? We're gonna rotate those through, and we're gonna manage our hours. And the dealership guys are talking to me about how they want some that have 250, some that have 500, some that have 750, some that have 1,000, right? Which is great. I mean, I love doing that because it gave you a good spectrum of machines when they came back in. It was good for the customer, it was good for the dealership, and it worked good for the end user buyer, right? Because you had a nice portfolio of hours to look from, right?
It's a win for everybody.
Right. I just don't see those days continuing to grow, right? So back to the baler situation, right? If I'm a $90,000 new baler guy, I mean, even if you tell a guy, I'll sell you this used one for 50 grand, 55,000, they're gonna look at you like, what?
I bet you would.
I'm sure you probably would, and so I mean, it's like that conversation that you have, but you think about that, you're back from that machine at $90,000, right? So if you're selling it for $55,000, that means you're 30% back, roughly, of the new one.
Yeah,
right around there. So if you do the math on all that, and you're looking at everything, you're more than that. You'd be
say like 40%. 40, yeah,
about 40%. So even if you're that far back, someone's still looking at you like you're crazy.
Yeah.
So, Mr. Customer, you're your new buyer, Mr. Customer. We were trading for, I'm just throwing a number, $250 a bale. It's going to be $1,850 a bale now, right? To make this work, right? I mean, like that's the dynamics that you see happening.
Hey, guess what? We're still $250 a bale. It's just $2,250.
So that's the scenario that we're in right now. So I think when you're looking at that, if you're the guy that likes to buy that 5,000 bale, 7,500 bale baler guy, you probably need to be prepared to buy a 12,000 to 15,000 bale baler, and that's going to be where it's at.
And jump to new.
Jump to a new one, and there again, if you bought that new one, you look at what that cost looks like and that cost structure looks like. You're going to get an extra 2 years of running it comparatively to what you would normally get buying your used one, right?
Which goes to my point. I was just going to say, you said an extra 2 years. That's perfect. Go buy the new baler, put it on a 7-year note, and you take that payment on your 7-year deal, and your price per bale is probably the same as it was on the 5. Now, granted, you got that extra 2 years in there, but Casey just told you you're just gonna have to run it another couple of years, and there you just cash flowed it.
Yep, and the reason I say that the other 2 years thing,
and that I mean that's the weirdest thing to say. Taking someone who bought a used $50,000 baler and getting them up into the 80s and 90s for a new one sounds absurd, but when you cash flow the numbers out, that makes more sense. That could very well make more sense to him and he bought the 5 baler. What's he got? 10 or 15 on his?
Mm-hmm.
He's not going to want 15. So he's got to do something else.
Yep. And I think that's
and the beauty of it is he will create another 10 or 15, which is incredibly sellable.
Yeah. And I think that's where we're at right now when you look at equipment in general. I don't see a time where even I think even if you go back to and you look at this like, hey, we're $6 corn, right? We got all this different stuff. Everything's we got $15 beans. Like things are just banging, right? I don't see a bunch of people jumping back into hey, we're going to go, full bore and get a bunch of new stuff again. I think you're going to see a lot of people that have watched this scenario happen right now, and I think a lot of people step back and look and say, hey, you know what? I did pretty good with that 1-year-old trade-in that I bought. I did pretty good with that 2-year-old trade-in.
Hey, these are not the same guys that watched in 12 and 13 and did.
But I think it's a totally different scenario.
Are we importing and exporting operators?
what you got to think about, though, it's a totally different scenario right now, though.
No,
from
I know.
2012.
Everything's 3 times higher.
Yeah, I mean, you don't
Point damn blank. Price
get
is
it
the
back.
same. The price of the crop is the same. The bushels are 20% maybe higher.
Maybe, yeah.
20% higher. The machinery's 50 to 75% higher. Inputs are 100% higher. Different world. Just as we talked, it's not the numbers of items, it's the dollars per item.
If you go back to 2012 and look at what a brand new 680 combine cost, it was about $300,000.
It's laughable now.
325, right?
Right.
And right around there, 350 maybe. It was about 350, 325, something like that. Today that wouldn't, like, you $325,000 used combine's got 750 hours on it. You know what I mean? Like, that's a completely different world that we live in.
In the mid-teens, once upon a time, it was one of those jump up and down on the table moments. I know, rare coming from me if you know me. But I swore we're never going to wholesale a combine that starts with a 3. You people are, this was like 10 years ago. You people are nuts.
I remember that. But as you look how these things come down and you watch how they play out, I just think if you're a used buyer out there right now, I guess the point of what I'm trying to say here is if you're a used buyer out there right now, and even if you're a new buyer, right, dollars associated with trading right now are so big to get that next person to come into play. By all means, if you want to go out and trade every year and you can make it work, do it. It's great, man. Why wouldn't you?
Right.
But the backside of that is you got to get a used buyer to come into play. And if you're a used buyer, I think you need to start preparing yourself. Hey, I always like to buy a X, right? You need to add 25% to that X, I think, to get yourself. So if you're,
or you need to look at Y and Z.
Yeah. I just think if you want to buy that tractor with 1,000 hours on it, which I think is a great hour range to buy a tractor at, a late model tractor with 1,000 hours, I think it's a great number. I think the 1,000-hour tractor is now a 1,250 hour or a 1,500 hour tractor.
I'm going to say 15 to 18.
It's going to fall into that range pretty well. And I think as you watch this coming through, as you see what's happening, the machines that are getting traded in on the late model low hour stuff that's coming in, they're higher houred just because of the amount of, hey, I got to run it one more year, or hey, I'm going to do the repairs this year, and I'm going to put another season on it, or I'm going to put this the second season beyond what I normally trade. And you're seeing a lot of that happen right now. So be prepared when you're out looking for machinery, that if you are looking for that machine that's got that 1,000 hours on it for a tractor or whatever, 1,500 hours for a tractor, something like that, that is not the new normal for that 1,000-hour machine. Now that's a 750 hour machine.
Right.
You're used
exactly.
to that, right? If you're buying that 1,000-hour machine, you're in that 1,500 plus range, right? Somewhere in there, right? 1,500-ish hours plus or minus 250 on each side of it, right? If you're a 3,000-hour buyer, you're probably looking at close to a 4,000 or 5,000 hour tractor now. I mean, those are the kind of things that how the market's changed because the price of equipment is pushing the hours out further, pushing guys out, running their equipment longer, putting more hours on their machines, which in turn is going to change the dynamics as to what the value of that machine looks like. So what you used to be able to buy for 1,000 hours, now it's a 1,500 hour machine. Like, that's the dynamics that we're seeing move through here. And I think it's one of those things that if you're in the market to buy, really look at what your operation looks like, and where do you want to go, because in a lot of instances you may be buying one less season of use than what you're used to.
Right.
For
sure.
You know, if you run it for 3 years and you put 500 hours a year on it or whatever, to get to X number of hours, you're buying it with 500 more hours on it than you probably normally would have bought it. So now you're looking at, okay, well, my normal trade cycles is now condensed down to 2 years. Do I bump it out another 1,000 hours?
Yep.
Right, type of thing. So anyway,
real quick, I would like, as you were talking, this just popped into my head, and this is the absurdity of the machinery business. In the last, we'll just say last rolling 12, we've talked about how god awful it is to get 3 years of trades at once. And then in the same rolling 12, we've talked about how guys have to hold on to stuff way longer to make it cash flow, which then changes what's available in the used market. So what kind of a conundrum world are we in where both of those things are at the same time?
Yep. That's crazy. Yeah.
Hence a whole slug of 300-hour tractors in the world.
Yep.
And that's it. We're like in two different operational businesses almost. And there's a big gap getting from A to B.
That is very true. Very true. And that gap keeps widening.
It does.
That's it's not shimming up. It's getting it keeps going out now. So okay. All right, man.
It's like sandbagging a hole, but then that smooshed the water out and made two holes on each side of the bag.
Yeah, exactly. You're exactly right. Exactly right. All right, man. Good place to stop. Folks want to reach out to you, get some of your High Plains wholesale deals. What's the best place to do that?
Okay, you can catch High Plains Wholesale on Facebook and TikTok. Have video specials on there. You can see those same videos on my socials, Aaron Fintel at X or Twitter, and on Facebook. You can call me or text me, 30760-1193, and also on LinkedIn for what it matters. That's me. Casey, where can folks find you?
Anywhere podcasts are found on an AgWeb, as well as on Machinery, or not Machinery Pete. Machinery Pete does have a YouTube channel, but you want to go to the Farm Journal YouTube channel where you'll find my stuff and Greg Peterson's stuff. So check us out there. You can also find me on Facebook, Twitter, or X, Instagram, LinkedIn, either at Moving Iron Podcast or Moving Iron LLC. So check me out there. So with that, I want to thank Aaron Fennell, and I want to thank Rich Posson and Greg Machinery Pete Peterson for being on this edition of the Moving Iron Podcast. So with that, until next time, let's go with some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.